going on, guys, and welcome back to the Young and Intelligent Money Investing channel. Today we are going back to the basics and talking about how to start investing, and specifically using the Robinhood app. If you guys are already experienced investors, please still stick around. I might be able to teach you something that you didn't know already. And it's always good to get back to the basics when investing, because with my strategy it's usually pretty simple. And before we get into this, I just want to ask you guys, if you haven't already, please subscribe down below. Drop a like and comment what your investing strategy is for 2018. Alright, let's get into this, guys. So, as you guys can see, I like to use the Robinhood app, so my first step is going to be download Robinhood. Now, Robinhood is such a powerful platform because it allows you to buy and invest without any minimums or without any commissions. So a normal brokerage will charge about a $5 commission fee for every trade you make. So when you buy, you pay $5. When you sell, you pay $5. That doesn't give you very much freedom when you're buying individual shares. Like I would have paid hundreds of dollars in commissions fees for all of these trades, and these are only some of the ones that you guys can see. So I've saved $5 every time I bought or sold a share, and that really will eat into your margins, especially as a beginning investor. Because let's say you're only investing $100, well, you immediately lose 5% of your investment if you are paying $5 for a commission, or 0.5% at $1,000. That's still pretty sizable. A 0.5% lost day is a pretty bad day in the market. So definitely, I suggest using Robinhood. There's a link down below to a referral link that'll get us both a free stock when you sign up for Robinhood. I'd really appreciate it if you guys use that. Helps me out, helps you out, so it's a win-win. Okay, so number 2 is you guys are going to need to choose your investment strategy. Now, what I mean by this is there's a lot of different risk tolerances for kind of your stage in the market. If you're trying to gate a lot of money, like have high risk, high reward, or if you're trying to preserve your wealth. Let's say you've just come into a lot of money, or you're just starting out investing, but you've been working a high-paying job for a long time. Maybe you've scored some money on Bitcoin or cryptos, and now you're trying to invest that money in a safer asset. You want to have a little less risk in your portfolio. So for that, you're likely going to want probably some dividend stocks and a little bit more of the value stocks rather than the growth stocks. Now, the growth stocks are great for younger people, especially, because you don't really need that money right away. You're kind of putting that money away and checking on it, just like you pretty much want to cash out on that 10 years, 20 years, 30 years later. So that'd be something like a Amazon or many of these tech stocks, which you aren't going to get paid back in dividends in the short term, but in the long term they should pay off pretty big. I personally am a mix of a value and a growth. I probably should be a little bit more on the growth side, but I do like to preserve my money. So I have a hard time buying into stocks that don't pay dividends and kind of can have big swings of multiple percentages in a day. So definitely choosing your investment strategy is extremely important when getting into investing. Now, you also have to make a decision on stocks versus ETFs. If you guys have watched other videos on my channel, you know that I'm a huge proponent of ETFs. They take about probably 3/4 of my portfolio, maybe a little bit less than that, but all of these, from SDIV to the top, these are all ETFs. And if you guys want to see my equity, it's pretty sizable in there. So I like ETFs because they're pretty safe and they kind of diversify you instantly when you are investing. So I think that's a great way to just kind of have safety in your investments. And because if you're at a single stock, that company might go bankrupt. You're not really diversified. Especially as a beginning investor, without a large sum of money, it's really hard to have that diversity that you need in order to kind of have exposure to all sectors of the market. So next, what you're going to need to do is fund your account. You can do that through the banking. It's pretty easy. They'll likely either link directly to your account, or you can, or they'll do microtransactions if you're at a smaller bank, kind of like I am. Now, the final step is just going to be to invest. So a couple of ones I recommend for beginners. We're always going to like the Vanguard funds, and I have a video recently on an intro to Vanguard ETFs. I highly recommend you check that out if you're a beginner investor. One I really like is VOO because of its low expense ratio. VYM is a great one for growth and dividends. And a lot like that. SPHD is also a great one for beginners. It has a little bit higher of an expense ratio, but it does pay out monthly. So, like, all these dividends I've gotten have been a really great experience for me as a new investor. So, that is what I've got for you today. I hope this guy helps out you guys who are a little bit newer to the markets. I was asked this in the comments below as for somebody who has never invested before and doesn't really know what investing is. So I figured as an investment channel, I should probably have a video where I explain the basics of investing and how to get started. So I hope you guys enjoyed this today. Please drop a like below, subscribe if you haven't already. About 75% of our viewers watch and then haven't subscribed yet, so please just hit that button, hit the bell button to get notified when I make new videos, and I will see you guys in the next one. Thank you.